Hey you guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday where we look at all of the charts and to see what's gone on over the last week. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So let's jump right into the charts. As always, we're going to start right here with the Bitcoin TABI model, the TABI model. And as you can see, it is clearly orange. If we zoom in on the last bit of price action, what you'll notice is that the MVRV scores and the Meyer multiples have both come down over the last, 2 weeks or so after we hit the all-time high. So things have cooled off. In fact, the MVRV Z-score, if we blow that up, you can really see it pretty predominantly dropping from 2.71 down here to 2.31. The actual Z-score itself down to 2.31. And if we open up the Meyer multiple, you can see it. It just shows a bunch of ones down the side, but it was like 1.56 and it dropped down as well. So what does that tell you? That tells you that the network, despite the price action spiking to 123,000 and then pulling back most recently to 112,000, despite that pullback, the network itself is still very healthy and is not significantly overbought at this point. That's one way of looking at it. It's kind of a TA term mixed in with an on-chain term, but the MVRVZ, Meyer multiples, those things look at how far away the price action is from the 200-day moving average, for instance, or percent. Other on-chain metrics look at the percent of holders that are in a profit. And all of those things are factored in here into the IA TABI model, creating a light orange color, meaning slightly overheated, but nowhere near the darker orange, the light red, or the dark red that still follows with the typical topping pattern. You'll also note you can see a very, very clean retest right here of the 50-day moving average. You almost couldn't script that better on the second and third. So over the weekend, Saturday and Sunday, we had an almost perfect retest of the 50-day moving average. You can see that also right here. It's a green line right here, but you can see it on the one-day Bitcoin chart, still in a positive uptrend ever since April the 7th, even with that pullback. This puts it into perspective. People were freaking out about the most recent pullback, and when you look at it, it's nothing compared to the one that we saw on June 22nd, right? That percentage-wise, from 111-ish, 110, 111, all the way down to 98, that's a much bigger percentage drop than from 123 down to 112. That's only 11,000 points, not even a 10% drop if you want to look at it from peak to trough, okay? Global liquidity, if I blow that up, we did peak with global liquidity on July the 1st, and there's been a slight decrease ever since, little blip up here at the end, but a slight decrease ever since July the 1st. So what was just going up and to the right, and you can really see that puts it into perspective. That's why I say a slight decrease. What was just screaming up and to the right, we finally broke through this previous high that we had put in on October 1st. We retested it right here in March and then took off again. Right now, we've retested this 98, I think that's trillion, 98, please correct me if I'm wrong, $98 trillion. But regardless, there is a lot of money coming into Bitcoin right now, and you can see that pretty clearly here on the daily chart. You can also see very clearly the gap that I was talking about before that is now partially filled in, and I'm going to show you that on the 4-hour chart. So on the 4-hour chart, we screamed upwards and consolidated here between, call it $50,000 and $70,000, right? That was, I think, a 8 or 9 month consolidation. We had the election, screamed all the way up to $110,000, $108,000 to be exact, and then consolidated between there and $75,000. It's a kind of angling down into the right consolidation. Then we screamed upwards again, this time up to $111,000 and traded sideways for a couple of months. And then we had another bounce right here, all the way up to $123,000 and have since traded sideways with this little blip down that we just had recently where we retested the 50-day moving average. So I told you I'd show you what I meant by this gap. So this is what I'm going to do. It's going to look kind of funny here for a second, but I'm going to move the most recent price action off the chart for a moment. Let the VRVP reset here. And you can see there was only blue buying pressure from 113, we'll call it 113.8, all the way up to $115,000. There's no yellow right there. In fact, as you go down even below that, barely any yellow right here in this 113 to 114 range. Go all the way down here to 111, 112. Still no yellow. It's all blue, and there's barely any volume compared to this massive amount of volume that you see up here. That is because we screamed right through those levels. When this shot up and did what's called a short squeeze and liquidated all of the shorts, people that were short all along the way here got liquidated as the price screamed through there. It was only buying pressure. There were no sellers at those levels. Very little. I can't say none, but you can see there's hardly any yellow from here to here in that range that I just highlighted on the right-hand side of the screen. Okay, so now let me get rid of those drawings real quick and let me move it and show you. Watch this area right here that I'm highlighting between 114 and 115 and even down to 112. Watch this area fill in, okay? Boom. A lot of volume. A pretty healthy mix of buyers and sellers here from 115. Remember, the zone was from 115 down to 112. There was virtually no yellow and very little blue. Now there's almost an equal amount of yellow and blue, an equal amount of buyers and sellers, and a lot more volume transpired. We filled in that gap. I'll show you the gap one more time. You'll see it here. Virtually no volume between 112 and 115. And then if I just slide it sideways, again, we're looking between 112 and 115, starting here. A lot of volume that filled in right here, okay? That's what we call when we talk about it filling the gap, all right? That's what happened on the 4-hour chart. With Bitcoin, you see that we were significantly mean reverted to the downside here over the weekend since I talked to you guys last. Perfect buying opportunity, bouncing off the 50-day moving average. You didn't even really have to wait for the green triangle. You could see it in MACD. You can see it in the RSI. The RSI was clearly below 30 right here. So anywhere down here in this 112 to 113 range would have been a steal. You could have limit orders sitting there waiting, because remember last week I told you there was a gap there and it may fill all the way down to 112. What did we go down to? We went down to exactly 111,903. So I'm sorry I was off by $97. I was close, but I was off by $97. I said 112 and it went a little bit further down than that. So anyway, kind of cool to see TA work out the way it's supposed to. This is the Solana Bitcoin chart. Again, so many people think there's been a lot of movement there, but a lot of movement has been in this tight trading range. If we go from the bottom of the range to the top of the range, we're talking about a 40%. So 20% either way of the center of that, with the center of that range being around 0.0015. We've been up as high as 0.0018 roughly and down as low as 0.0013 roughly, right? So it's just trading in this very tight range right now, this pair. And when we zoom in, we have had some little spikes, right? We came off the bottom down here on the 22nd of June and spiked all the way up to 0.0017. That means at this point, when you're up here, you're looking to go from Solana to Bitcoin because you'll get more Bitcoin for the same amount of Solana. Down here, you want to go right here. You want to go from Bitcoin to Solana because it'll cost you less Bitcoin to buy Solana. So this is a buy Solana down at the bottom and a sell Solana up at the top. Those are little flags that I drew them because it doesn't always give you a flag, but it gives you an idea of when the momentum changes direction, okay? That's what I'm seeing on Solana Bitcoin. Again, I still believe that over the next 3 to 6 months, Solana will outperform Bitcoin at least 1.5 to 1, if not 2 to 1. So that means what you should see on this chart is you should see this start grinding its way up so that instead of being at 0014, we're up here by 0028. That would be a 2-to-1 over the next whatever time frame it takes for us to get up here to that 2-to-1 from where we are right now. Solana would be outpacing Bitcoin on a 2-to-1 ratio in order for this to double from 0.0014 to 0.0028. Solana one-day chart, still in an upward grind, but boy, we've retested the bottom of this linear regression channel a few times, and the channel's just not very tight anymore, quite frankly. So we keep, every time we get close to the next resistance zone, we pull right back down to our familiar place, which is this 200-day moving average. Now, this is a very healthy retest of the 200-day moving average. I'm going to zoom out a little bit, and you can see a retest back here on the 13th of January. You can see another retest here on the 3rd of February, another retest right here on the 16th of February, and that was a failed retest to the downside right there. Okay, that's supposed to be an arrow, but right here where I just circled, that's what I call a failed retest to the downside. We then retested to the upside and bounced off the 200-day moving average. Bounced off it, bounced off it, bounced off it, bounced off it. Finally broke out and now have come down to retest it. That's a bullish signal. That's a healthy retest. That's a place where you could typically go into a long, not financial advice, again, just technical analysis advice. Usually a retest of the 200-day moving average from the top is a strong place to take a position, because if it doesn't break down from the 200-day, it typically bounces. I'll show you what I mean back here. Here's a very close retest. We broke out. We didn't quite get to the 200-day, but we got very close and bounced in a big sort of way from down here at 156 all the way up to 264. Over 100 points after retesting the 200-day moving average. Here we were above the 200-day moving average. We came down and retested it once and twice and bounced. Retested again and bounced. Retested again and bounced. Then broke down to the underside of it, retested it and broke down. So when you're below it, no bueno. When you're above it, bueno. Okay, that's the easiest thing to remember. We are coming off of an overheated on the daily chart. You can see the mean reversion is up to the upside. And check out this RSI value. That RSI value on the daily was almost 83. That's pretty high to the upside. Typically a selling signal, at least in the short term. Coming over here to the 4-hour chart on Solana. 4-hour chart looks kind of boring, right? It's kind of been going sideways. Yeah, I know. We were all the way down here as low as 95 and all the way up here as high as 205. That's a 105-point move since April the 7th. But here we were really, really undervalued. The center point of it all is 150. Anytime we get near 150 on Solana, that seems to be, it's the point of control. You can see the red line going across right here. So for the last 4 months, the point of control has been 150. That's where more tokens have exchanged hands, as at $150, right? We retested the 200-day. You can see it here perfectly, along with the 50 and the 100. All three of them have come together. All three moving averages are right here together. When the 50 crosses up through the 200, any guesses as to what that is, drop it in the comments. When the 50 crosses through the 200, yes, I paused on purpose. It's called a golden cross. When the 50 crosses up through the 200, we just had a mean reversion dot. That's one of the most significant ones that we've had in a while, meaning we were very, very oversold, needed to be bought up. And there's that RSI value dropping well below 30. So we went from well above 80 to well below 30 in a matter of a week and a half. So that just shows you there is trading to be had right here. A clean sell signal right there. After the trend flips up at about 195, a clean buy signal down here. The trend doesn't flip till 164, but remember I told you anything near 150 is a buy, so hopefully you were able to jump the gun right there. Tesla on the daily chart is still grinding sideways right now. Yes, this linear regression channel is angled down and to the right, but we're not making lower lows. We're also not making higher highs. We're really making more of a wedge pattern right here. We've talked about that on previous TA Tuesdays. You'll note that the moving averages have all almost come together. We have the green getting ready to cross down through the yellow. That's the 50 going down through the 200-day moving average. Any guesses as to what that is? That's correct. That is a death cross. They call that a death cross. But remember, guys, I told you I don't put a lot of emphasis on those personally. I think they're kind of lagging indicators. Mean reversion is flat. RSI is flat. MACD is flat. Really, the last couple weeks, Tesla has just been trying to find its way. I think it's this push and pull. Some good news comes out and then some bad news comes out. Some good news comes out and then some bad news comes out. Elon and Trump are friends. Elon and Trump are enemies. And it just literally keeps this push and pull, which is a battle right now between the buyers and sellers. But there's one thing that's clear as day, and that is 360 is resistance right now. Period. No ifs, ands, or buts about it. We're going to have to work hard to work our way through 360 to the upside. Here you see the green getting ready to cross through the yellow. That would be a death cross. We're coming off of oversold conditions on mean reversion on the 4-hour chart. Also, RSI was down there by 30 on a couple of occasions, right here and right here. So currently, I believe 300 or less is a steal right now on Tesla. That seems to be the really rock solid floor. And the resistance to the upside, 350 to 360 right now for the short term. Could we break through that? Yes, but it's going to take something, some kind of big news, some kind of catalyst to break us through that 360 to the upside. All right, MicroStrategy. Wow, guys, we've had a fun week with MicroStrategy, haven't we? They did their earnings report last Thursday. I do plan to do a video to really break it down in detail because there was so much there. But the most important thing, in my opinion, that came out of it was twofold. One, they are going to use those preferred stocks to generate the majority of the cash they need to buy more Bitcoin right now. They are not going to use the ATM. The only time they're going to use the ATM is when the mNAV, which you see down here, that's a horrible circle, but down here at the bottom of my chart, when that mNAV is greater than 2.5. That is the only time he said that he's really going to tap the ATM or at the money. That's selling common shares of stock, which is dilutive to buy more Bitcoin, which is accretive. Kind of an oxymoron, right? But what that means is he'll sell more shares of common stock, which dilutes the common shareholder, but uses that money to buy more Bitcoin, giving each common shareholder more sats per share, more Bitcoin per share. If you have a long-term view, that's fine. If you have a short-term view, in the short term, that typically causes the price to pull back, okay? So those are the two major things that I saw coming out of it. If we look here on the daily chart, perfect bounce on the 100-day moving average, almost to the penny. It came down, tested the 100-day moving average, and bounced right back up to the 50. We were supporting on the 50 up here for a while before we broke down. We also broke just slightly out of this linear regression channel that we've been in since all the way back on March the 10th. We did that one other time and wicked all the way down to like 235 and then immediately zapped right up to 430 and then teleported to 456 up here before coming back down out of the channel. Where's the top of the channel? Well, currently the top of the channel is up here at about 500. So it gives you an idea. There's a lot of analysts that have also come out with $600 to $700 price targets. Another one just came out yesterday. Last week or 2 weeks ago, you had Cantor Fitzgerald saying 680. I think I said that on the last video. But look at the mNAV. Every time this mNAV, I'm going to blow this up so that you can really, whoops, I'm still in the drawing mode. Sorry, guys. Give me one moment. I'm going to blow this up here at the bottom. And every time this mNAV gets down here by this green line at 1.5 or less, that's typically signified a really good time to buy MicroStrategy. So let's take a look. I'm going to circle it here without even looking at the price chart. We're down here by 1.5, 1.5, 1.5. We're pretty close right there and definitely back there. Now watch what happens whenever I combine that with the price chart. Yellow action right here. Was that a good time to buy? Absolutely. We went up afterwards. Yellow action right here. Was that a good time to buy? My goodness, couldn't have been a better time than September the, what was that one? The September the 6th. Cruising over here to this yellow action that I just painted right there. That's one part of a double bottom that happened over here. 1, 2, we double bottom, wick, down. Perfect times to buy. And now we just had another yellow action over here. Is that a good area to buy? Well, I'd say so. Again, you could use just the mNAV itself to determine when to be a buyer here of MicroStrategy. Okay, that's on the daily. Moving over here onto the 4-hour chart, I'm going to show you again. I want to show you another example of this VRVP in action. Okay, so I'm actually going to turn the numbers on. I want your eyes fixed right there where I just drew an arrow. See this arrow I drew? I want you to be looking over there at these volume numbers that you see with the VRVP. So right now it says 350,000.13 and the other one says 289.86 thousand shares, okay? And I'll explain what that means in a moment, but that's where I want your eyes fixed. And what I want you to look at is I want you to look at since the election, let this fill in over here on the right-hand side. And I'm going to zoom in, okay? Since the election, take a look down here at the profile. We're literally going to start right about here at 370. And we're going to look until we get down here till about 350, okay? So we're looking at the area in between those two yellow arrows that I just wrote. I'm going to switch the color here for a second to red so it stands out on the bars over here. So right here at, I said 370, at 370-ish, which is about right there, there's 1.98 million buys. Blue is buys, and there's 1.98 million sells. If you don't remember where you're looking, you got to look where I drew that first arrow up and to the left over in the indicator legend. It tells you flat out how many shares were bought and sold. What does a buy mean? It means it's bought at the ask, driving the price up. A sell means it was sold at the bid, driving the price down. Okay, if you don't understand bid and ask, that'd be a great thing to go learn in trading on your own. Okay, you got to understand bid and ask. So we're pretty much even, an even number of buyers and sellers right here at this level. That's why I did it in red. Now let's cruise down to I'm going to cherry pick this a little bit. To 362, 361.93, call it 362. There you notice there's 637,000 sellers or yellow and 1.47 million buyers. 2 to 1, the number of buyers over here, 2 to 1 sellers over there. All in this range right here. Notice there's not very much yellow in that area that I just circled. That tells you that is a support level. The minute the price drops to 365, bang, the buyers step in. And they don't just step in a little bit, they step in hard at a ratio of 2 to 1. The sellers start laying off. They stop selling at the bid and they allow the buyers to take over and start buying at the ask, driving the price back up. Okay, so now let me go back to where we were right here. And let me show you. See the line I just drew? Look at how many times we wicked down to that level. 1, 2, 3, 4, 5 times that we've wicked down to that exact level. And we don't go any lower than that. Why don't we go any lower than that? Because over here, the buyers step in like madmen and women. That's why we don't go any lower than that. So I wanted to go a little deeper today to show you guys the better you understand TradingView and technical analysis, the better trader you're going to become. If you have not, and yes, this is a shameless plug, not so shameless. If you have not taken my TradingView and technical analysis course, you need to. Just plain old need to. You can find the link right there. It's at gdinerocoaching.com. It's called TradingView and Technical Analysis. Take that course because, guys, it makes this much easier. It becomes shooting fish in a barrel when you have all the right tools and you understand how to use them. There are so many different indicators available to you outside of the IA system. Yes, the IA system makes it even easier. Goodness gracious, I use IA DSS. You see it on every single chart. You see that I have the confluence model turned on twice on every chart, that I have mean reversion on every single chart. I use the IA DSS on every single chart of mine. But I also use a lot of the free built-in indicators, because when they all start aligning, like here, green mean reversion dot that's more than one standard deviation to the downside. We had a couple of them right here, 1 and 2. That one, believe it or not, will be right on the bubble. But 1 and 2, 2 green mean reversion dots. RSI drop below 30 right here. MACD crosses over right there. On any of those, we hit the 100-day moving average. We hit the bottom of the linear regression channel. It doesn't matter which one you're using. They're all screaming the same thing. The buy signal that you see right here. The trend getting ready to flip blue. All of those are buy signals. Okay? Those are all buy signals. Nvidia. Sorry for this being long today, guys. Nvidia daily chart up and to the right. That's all you need to know. That sucker just does not quit. Up and to the right, we've been mean reverted to the upside on the daily chart since May the 6th. We have not been mean reverted to the downside since May the 5th or 6th on the daily chart. Look at the trend. The trend is just strong and blue. Linear regression channel is tight. 0.98 Pearson's coefficient. That's ridiculous. Anything over 0.9 is a really tight fit to the model, basically, is the easiest way to explain it. And here we just keep making new all-time high, new all-time high, new all-time high, new all-time high. Now the new all-time high is $183.30, $183 a share. Coming over here and looking at it on the 4-hour chart, same thing up and to the right. We almost mean reverted to the downside with this massive, in quotes, or upside down commas, or whatever they're called, inverted commas over in the UK and over in Australia. But on the 1st of August, we almost mean reverted to the downside right here, August 1st through 4th, almost, right? Because we pulled back from 184 down to 170. So we dropped 171. So we dropped 13 points, not even 10%, 7%, and still we're not mean reverted to the downside. So last time on the 4-hour was April the 24th. Super strong, cruising towards this earnings. I can't even imagine what they're going to report at earnings. I suspect it could potentially be a sell the news event, because everything eventually mean reverts and takes a breather. I think this thing's going to take a breather eventually, but we'll see. To be continued, as my friend James Check would say. Next up of the things that I take a look at, I'm going to go MicroStrategy Tesla. So here's the MicroStrategy Tesla pair chart, and it's still, since the end of last year, so all year in 2025, it's been generally trending up and to the right, meaning MicroStrategy has generally outperformed Tesla over the last 7 months, 8 months almost, 8 months. So generally trending up and to the right. Right now, it's the least volatile that it's been in a while. We're trading in a very tight range right here, right around the 61.8% fib level and close to the middle to lower one half of the linear regression channel. Remember, I said you could use a number of different things. You can use the buy and sell signals that you see here. You can use the top and bottom of the linear regression channel. You could use the middle of the linear regression channel and play the moves in the top half, play the moves in the bottom half. You can use the cloud, and when it's near the bottom of the cloud, you're going from Tesla into MicroStrategy, and when you're near the top of the cloud, going from MicroStrategy into Tesla. You can use mean reversion dots, and when you see substantial ones, go from MicroStrategy to Tesla when it's overheated, and go from Tesla to MicroStrategy on the bottoms. You notice how that correlates with some of the other signals you see. You can do the trend. When the trend flips from blue to orange, you go MicroStrategy to Tesla. Orange to blue, you go from Tesla back into MicroStrategy. There are you can use fib levels. Go trade from fib level to fib level. You can just use random ratios and say, hey, if it gets near 1.5, I'm going MicroStrategy to Tesla, and if it goes back to a 1-to-1 ratio, I'll go from Tesla back into MicroStrategy. There's 5, 6, 7, 8 different things you can use to trade this pair. Stop being perfect. Stop being perfect. I talked to one of my clients yesterday and I told him, I said, just stop being perfect on this thing. Too many people want to get the absolute bottom or the absolute top. And the guy, when he stopped being perfect, believe it or not, got 1.03 down here and 1.46 up there. He almost got that very top wick, and he did get this wick to the bottom here. We didn't get any lower than 1.03. And that's with him stopping being perfect. He nailed it. He increased his bag by over 25% in a single trade, increasing his bag. He went Tesla to MicroStrategy, MicroStrategy back to Tesla, increased his Tesla bag by 24%, if I remember correctly. All right, so it's doable with this. Just realize when one is outperforming the other, then step back and think of the bigger macro picture. Which one is hotter right now? Which one has the news cycle behind it more right now? Which one has the country behind it more right now? That's the one you probably want to be in. And then when the news cycle starts to beat up the one that is the darling right now, and the other one starts to hit the metrics that they say they're going to hit over the next 3 months, 6 months, 1 year, 2 years, 3 years, then you slide your bag over into that one. Okay? I'm trying to put some hints out there without just being blunt about it. But Bitcoin and MicroStrategy is all the rage right now. Tesla is the one that has good news and incredible things on the horizon. But the immediate short term, if you're more concerned about what your portfolio is going to look like in the next 3 months, I'd be leaning towards MicroStrategy over Tesla. If you're more concerned about what your portfolio is going to look like in 5 years, you can't go wrong with either one of them, but Tesla will likely outperform MicroStrategy over that time frame, although that's what some individuals on the internet think. Me, on the other hand, I still think MicroStrategy's got a shot of outperforming everything and being the most valuable company on earth. But notice you can't go wrong with either one. That's why I said stop being perfect. Give yourself exposure to both, and then take a portion of your exposure and trade it back and forth to always be on the faster horse. That's how it's done. That's how I do it, at least. Finally, we're going to look here at the preferreds. The preferreds skyrocketed. Preferreds meaning STRK over here, STRF in the middle, STRD in the upper right, and STRC in the lower right. These are the preferred products for MicroStrategy. I do need to do an updated video that includes C, because C is the most like a money market fund, basically. It's paying the dividends on a monthly basis, trying to keep the price right around par value, which would be 100. But you notice we've only traded below 100, but we have pulled up from a low of about 93 up to 96. You're not in these for the share appreciation as much as you are the dividends. This one's paying about 2.25. This one down in the lower right, 2.25 every, scratch that. This one's paying 9% per year. Take 9 and divide it by 12, and that's what it's paying on a monthly basis. I'd have to go do that math right now, but somewhere around 0.75% per month. This one, on the other hand, is doing 10% is STRD, STRF, 10%. So that's easy. That's $2.50 a quarter. And this one is $8 or 8% at par value. That is $2 a quarter. So $2 per share per quarter, $2.50 per share per quarter, $2.50 per share per quarter, and 75 cents per share per month, roughly on these guys. Okay. And finally, our rotation model. The rotation model just triggered a buy signal yesterday for MicroStrategy. So I am following this to a T. I actually started on the 25th of June, which was back here. It said I should be in gold. So I started my whole process, predominantly in gold based on the rules that I've set on my rotation model. I swapped a majority of my holdings into Palantir, a majority of my holdings into gold, another portion of my holdings into gold here. I bought an additional, 25 shares of gold there. And then over here, swapped and sold off $42,500 worth of gold and moved that into MicroStrategy at 387, if I remember correctly, yesterday. Okay, so far I can attest that I started back here on the 25th of June, which with pretty close to a $50,000 portfolio. And right now, as of yesterday, it was valued at over $55,000. So a 10% gain in 6 weeks on that portfolio. That would imply somewhere in the range of I think like a 75-80% return per year. If I were to keep this up at the rate things are going, that's massive, guys. So I am pretty amped on the rotation model. I may not have been as nice about it at the beginning. I think part of it is I just really enjoy trading. So that's why I took a portion of my portfolio and actually put my money where the IA mouth is, meaning the IA team, talking about how incredible this model is. And guys, it's growing on me. I'm not going to lie. It's to be up from this point to here. So that's 6 weeks. And to be up $5,000 in 6 weeks or 10%, I'm happy with that, especially with all this crazy price action that's gone on. Oh, by the way, if I had hodled, it was less than a $1,000 gain. Meaning if I would have left myself in everything that I was in back here on the 25th of June, I'd be up just under $1,000. But instead, by actually using the rotation model, I'm up over $5,000. So I kind of like this rotation model. All right, guys, that was a marathon session today. I hope you enjoyed the video. Let me know, what did you like best? Drop a like on this. Make sure you're subscribed so you see more videos like this. And drop a comment below. What did you like best? What did you learn today? Did you like me delving deeper into one or two of the actual indicators so that you can really start to learn these things inside and out? If you did, share this out to somebody else so that they can see it as well as you, so that you can help your friends understand TradingView and technical analysis just like you. If you want to become a ninja, meaning a master of TradingView, then make sure you sign up for my TradingView and technical analysis course. Maybe you want to learn how to trade options. I wouldn't do it any other way, but start with my course. I know that's pretty in your face. I just know from the people that I'm talking to, I'm working with people that took my course back in January and February and March, and they are crushing it right now. They're absolutely crushing it. Some of them making $10,000, $20,000, $50,000 a month. Yes, 50, you heard me right. Sure, their bags are a little bit larger perhaps, but they're crushing it by learning how to trade options. That's called understanding options. I also do a limited number of one-on-one coaching sessions. And finally, I'm G Dinero. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. Guys, thanks for tuning in, and we'll see you next time.